Hello viewers, welcome to my channel. I'm Hasham. Last video, 5 problems I have completed on retirement benefits, that is gratuity. In this video, the remaining all problems I'm going to complete on retirement benefits like gratuity, commuted pension and leave encashment. Next video will start the new topic, deductions from gross income from salary under section 16. So all the problems are based on the provisions. So be perfect on the provisions of Income Tax Act, then only you can be able to understand the problems. If you have not watched the earlier videos, I suggest you go to the playlist of my channel, select the subject income tax for the assessment year 22-23. Watch the videos on retirement benefits. What are the provisions regarding gratuity, commuted pension, leave encashment, etc. Then only you can be able to understand the problems. So before starting the 6th problem, I expect my viewers to have a printout of the problems, which I have given in the link under my description. Always keep it ready. Take the screenshot of the points which I have written on the board, then I'll explain every point in detail. Now, see the problem number 6. Mr. Vardhan retired from Indian Army services in 2002-2003 previous year and received 1,40,000 as gratuity. So the assessee was a government servant, government employee, and he retired in 2002-2003, very long back, and he received 1,40,000 gratuity at that time. After 2 months, he joined in a limited company as Chief Security Officer during the previous year 21-22. Current previous year is 2021-22. He retired from the service of limited company and received 25,60,000 as gratuity under the Payment of Gratuity Act. Calculate the tax liability for the assessment year 22-23 if income from salary and other heads excluding gratuity received is 7,54,000. Now, very interesting problem. In this problem, the assessee was a government employee earlier and he retired from government employee in 2002-2003 and he got gratuity 1,40,000 at that time. Immediately after retiring, he joined in a private sector, non-government employee, and worked as a Chief Security Officer. And during the current previous year, he retired from this non-government employee. Then again he got this gratuity 25,60,000. The details are not given regarding salary, etc. Income Tax Act says the total exempted amount will not exceed 20 lakh. The maximum exemption limit is available up to 20 lakh. Presently he is a non-government employee. So he will get exemption under Payment of Gratuity Act. Right? But earlier he was a government employee and he got a gratuity of 1,40,000. He got the exemption. So out of 20 lakh total maximum limit of exemption, 1,40,000 exemption he already availed. So from 20 lakh, deduct 1,40,000. The remaining amount he can get the exemption now. See, presently the assessee is a non-government employee and is governed by Payment of Gratuity Act. Details of salary are not given in our problem. So we cannot calculate salary, 15 days salary, etc. And then we have to make an assumption that is entitled to claim exemption up to the limit available. Total maximum limit is 20 lakh, out of which 1,40,000 he already availed in the past when he received the gratuity from government employee. So present maximum limit is 20 lakh. Exemption claimed earlier 1,40,000. So 18,60,000 is the exemption limit available right now. Right? So actual gratuity received 25,60,000 given in the problem. Exemption available is 18,60,000. So 7 lakh rupees is the taxable gratuity now. Right? 7 lakh rupees taxable gratuity. Apart from that, he is having income from salary and income under other heads. How much? 7,54,000. So add up 7,54,000. Total 14,54,000 is the total gross total income. That is called the gross total income, GTI. From GTI, one deduction is allowed called standard deduction up to 50,000. In the next video, I am going to explain you about the deductions from GTI, gross total income. What are the deductions? So here, standard deduction will be the deduction allowed from income from salary. Because he is having gratuity will come under income from salary and salary and other heads income. So deduction, standard deduction is allowed 50,000. So deduct, it is 14,04,000 is the total income. On this 14,04,000, tax liability will be calculated. So in computation of tax liability, the basic exemption limit is 2,50,000. So up to 2,50,000, income is 2,50,000 and rate of tax nil, amount of tax nil. The next slab goes from 2,50,001 to 5 lakh. Second slab, 2,50,001 to 5 lakh. The income will be 2,50,000. 5% is the rate of tax. So 2,50,000 into 5%, 12,500. The third slab goes from 5 lakh 1 to 10 lakh. The income will be 5 lakh. 5 lakh 1 to 5 lakh 1 to 10 lakh. The income will be 5 lakh. The rate of tax 20%. So 5 lakh into 20%, 1 lakh. Now excess over 10 lakh. Whatever income over 10 lakh is there, 30% is the rate of tax. What is the total income here? 14,04,000. 14,04,000 minus 2,50,000 minus 2,50,000 minus 5 lakh. The remaining 4,04,000. On this 4,04,000, 30% is the rate of tax. 1,21,200. Now you add up 2,33,700 is the tax on total income. 2,33,700. To this add health and education cess. It's a compulsory 4%. So 4% of 233,700, 9,348. Add up 2,43,048. The tax will be rounded off to the nearest 10. So instead of 48, we will take 50. So 2,43,050 is the rounded off tax liability. That's all. This is the end of problem number 6. Seventh problem. Sri Jagat Chandrudu is working in 2 establishments where the Payment of Gratuity Act provisions are not applicable. So here the SSC is a non-government employee and working in 2 organizations. In both the organizations, this Payment of Gratuity Act is not applied. He on 30th June 2021, he retired from both the establishment during the current previous year after serving 20 years in first organization and 25 years in the second organization. Last salary drawn is 40,000, 72,000 per month. First organization 40,000, second organization 72,000. On the eve of his retirement, he received 10 lakh rupees and 14 lakh 10,000 rupees as gratuity from the 2 establishments. So total 10 lakh plus 14 lakh 10,000, 24 lakh 10,000 is the total gratuity received from both the establishments. Calculate taxable amount of gratuity. Here, the new point is the employer worked in 2 organizations and during the current previous year, he retired from both the organizations and received gratuity from both the organizations. But Income Tax Act says the limit of 20 lakh exemption will not be applicable separately to both. For one person, one limit is given. 20 lakh rupees is the maximum exemption limit, not more than. Even if the worker worked for 2 organizations or 3 organizations, whatever it may be, but maximum limit is 20 lakh. If the SSC is working with more than one employer, then aggregate of exemption of gratuity is limited to 20 lakh. Maximum exemption available will be 20 lakh only. To calculate the exemption, salary of 2 establishments shall be added. First establishment salary 40,000, second establishment 72,000. Number of years of service completed, first organization 20 years, second organization 25 years. The gratuity is exempted to the least of the following 3 amount as usual. Payment of Gratuity Act does not apply. The first actual gratuity receipt, add up. First organization 10 lakh, second organization 14 lakh 10,000. Total 24 lakh 10,000. This is the total gratuity received from both the organizations. Now half month's average salary. Average salary means the average of the last 10 months. But here nothing, no information is given, only last salary is given. So we assume the same salary is continued since the last 10 months. So average salary and salary means same. The half month average salary into number of years of service completed. Now we take separately first organization and second organization. First organization, the salary is 40,000. So half into 40,000 into 20 years of service. This is the first organization. So 40,000 into 1 by 2 into 20, you will get 4 lakh. Second organization, salary was 72,000 into half into 25 years. 25 years served in second organization. So 9 lakh. So 4 plus 9, 13 lakh. Then third one fixed. Fixed is 20 lakh only. Don't take 40 lakh, 20 lakh, 20 lakh. Income tax act says only one limit will be given, 20 lakh. Now least among these three, 24 lakh 10,000 or 13 lakh or 20 lakh, whichever is least. 13 lakh is the least. That is exempted. Now we need the taxable amount. The actual gratuity received 24 lakh 10,000 minus exempted amount is 13 lakh. Deduct 13 lakh, 11 lakh 10,000 is the taxable gratuity. That's it. 7 problems completed. Now 8th problem. Sri Hasham retired from the service after serving for 29 years. During the previous year, he got 1/4 of the pension commuted and received 4,50,000. Calculate the taxable amount in the following cases. If he is a government employee, first case. Second, if he is a government employee, non-government employee and received gratuity. Third case, if he is a non-government employee and did not receive any gratuity. This is the first problem on commuted pension. Commuted pension. SSC retired and he commuted 1/4 of his pension and received 4,50,000. That's the point you have to remember. Now one by one. If the SSC is a government employee, in the last video theory I have explained you, the commuted pension received by government employee is fully tax free, exempted from tax, no tax at all. So here, the commuted pension received by government employee at the time of retirement is fully exempted from tax. Hence, the taxable commuted pension is nil. First case over. Second case, if he is a non-government employee and received gratuity, in that case, half of the total commuted value of pension is exempted. Limit of exemption is 1/2 of the total commuted value of pension. Total commuted value of pension is not given. What is given is 1/4 he has commuted and received 4,50,000. So this 4,50,000 which he received is 1/4 only. So what is the total total commuted pension? 4,50,000 into 4. That is 18 lakh. 4,50,000 into 4. You will get 18 lakh. In this case, 1/3 of the total commuted value of pension is exempted. 1/4 of his commuted pension received is 4,50,000, that is given in the problem, right? Therefore, total commuted value of pension is 4,50,000 into 4. You will get 18 lakh. The total commuted value of pension is 18 lakh. But Income Tax Act says up to 1/3 is exempted if he receives gratuity also. So 1/3 of 18 lakh comes to 6 lakh. The exempted limit is 6 lakh. Exempted limit is 6 lakh, whereas actual amount received is 4,50,000. That means taxable amount is nil, because actual amount received is less than the exempted limit. How we got exempted limit? 1/3 of the total commuted value, 18 lakh. 1/3 of 18 lakh is 6 lakh. How we get 18 lakh? It is given 1/4 commuted and received 4,50,000. 1/4. So this 4,50,000 is only 1/4. So we want the total. So multiply by 4. 4,50,000 into 4, 18 lakh. Second case over. Third case, if he is a non-government employee and did not receive gratuity, in that case, half of the total commuted value of pension is exempted. So 18 lakh is the total. Uska half, 1/2. So 9 lakh. So exempted limit is 9 lakh, whereas he actually received 4,50,000. The actual amount received is less than the exempted limit. Again, taxable commuted pension is nil. In this case, half of the total commuted value of pension is tax free. So half of 18 lakh comes to 9 lakh. The exempted limit is 9 lakh, but actual amount received is 4,50,000. So taxable commuted pension is nil. That's all. This is the end of 8th problem. Now 9th. Sri Bhaskar Rao of Swastik Oil Company Limited, Delhi, after serving for 34 years, 8 months, retired on 30th 11 2021. On the date of his retirement, his basic pay was 64,000. Under the superannuation benefits, he is entitled to receive 40% of commuted pension at the rate of 150 for every rupee and 23 months basic pay as gratuity. Calculate taxable amount of gratuity and commuted pension. Taxable gratuity and taxable commuted pension, both we have to calculate in this problem. The detail regarding salary is not given, only basic is given at the time of retirement. At the time of retirement, his basic was 64,000 and he received gratuity up to 23 months of basic. Now we calculate. First we calculate gratuity. The SSC is a non-government employee and received gratuity. Right? So gratuity is 64,000 rupees, that is the basic pay. How many months? 23 months. So 63,000 into 23, 14,72,000 is the gratuity received. Now salary is given 64,000, 15 days salary. Because we assume the organization, the employee is covered under Payment of Gratuity Act. Payment of Gratuity Act. So that's why we need 15 days salary. So 15 days salary is equal to 64,000 into 15 by 26, 36,923.07. Already we have done this in the previous video also, 15 by 26. Then number of years of service completed, 34 years and 8 months. That means we have to take completed year of service including any fraction which is more than 6 months. If it is more than 6 months, count it as 1 year. So 34 plus 1, 35 years will take years of service completed. Now gratuity is exempted to the list of the following three amounts. Actual amount received. Actual gratuity received 14,72,000. Now 15 days salary into number of years of service completed or a part thereof in excess of 6 months. So how much is the 15 days salary? 36,923.07 into how many years? 35 years. So multiply, we get 12,92,307. Third one, fixed 20 lakh. The least among these three is 12,92,307. This is the exempted amount. Now we need the taxable amount. So actual gratuity received is 14,72,000. 14,72,000. From this, deduct the exempted amount. The exempted amount is 12,92,307. The taxable gratuity comes to 1,79,693. That's it. So one part we have completed gratuity. Now we'll come to commuted pension. Commuted pension is 150 rupees for every 1 rupee of basic. So total commuted pension is 150 rupees for every 1 rupee of basic. So how much is the basic salary given? 64,000. The basic salary is given 64,000. So 64,000 into 150, you get 96 lakhs. The total commuted pension comes to 96 lakh. Out of which he received 40% of the total commuted pension. It is given in the problem. The employee received 40% of the total commuted pension. So 40% of 96 lakh, it comes to 38 lakh 40,000. This is the commuted pension received, right? SSC is a non-government employee and received gratuity. So commuted pension is exempted up to 1/3 of the total commuted pension. Because he is receiving gratuity, so 1/3 of the total commuted value of pension is tax-free. So total commuted pension value is 96 lakh. So 96 lakh into 1/3, it comes to 32 lakh. The exempted limit is 32 lakh. Whereas actual commuted pension received is 38 lakh 40,000. The actual commuted pension received 38 lakh 40,000 minus exempted commuted pension 32. The remaining balance 6 lakh 40,000 is the taxable commuted pension. So this is the end of problem number 9. Come on, now I am starting the last and final problem on this retirement benefits, problem number 10. Sri K.C. Arora retired from the service after serving for 25 years and received 15 lakh as leave encashment. The final problem is on leave encashment. So 15 lakh rupees he received in the form of leave encashment for 6 months. His employer allows him 1 month leave for 1 year of service. So how many years of service he has done? 25 years. So for every 1 year of service, 1 month leave. So 25 years, 25 months. Now, he has already encashed 6 months leave during his service period and availed 2 months leave. So 6 months leave already he encashed during the service and 2 months leave he has availed. So totally 8 months gone. Now his average salary 36,000. Calculate taxable amount of leave encashment if he is a government employee and if he is a non-government employee. So we are required to find out what is the taxable amount of leave encashment in two situations, government employee and non-government. First one, Sri K.C. Arora, if he is a government employee, already I told you in the theory video, government employee receiving gratuity, commuted pension, leave encashment at the time of retirement is fully tax-free, exempted from tax, no tax at all. So first case, very simple. If he is a government employee, leave encashment received by government employee at the time of retirement is fully exempted from tax, no tax at all for government employee. For non-government employee, exemption limit is there. So beyond that exemption limit, it is taxable. So here the provisions are, if he is a non-government employee, calculating leave time for the service period. In the problem, it is given that for every 1 year of service completed, 1 month leave. So he has completed 25 years of service. So 25 months of leave is available. Leave time for the service period is 25 months. Now calculating the ceiling amount. According to Industrial Disputes Act, according to the law, the ceiling period is for every 1 year of service, 1 month period. So here also we'll get 25 months. So actually employer has given 25 months and the ceiling period is also 25 months. Calculating qualifying leave period, which is least of the following two. Next step, qualifying leave period is least of the following two. Actual leave period or ceiling leave period. In our problem, both are same. 25 months, 25 months. Now, calculating leave period at the time of retirement. At the time of retirement, how many months leave is available? The total leave period is 25 months. From that, deduct the leave encashed and leave availed. So during the service period, he has already encashed 6 months leave. And during the service period, he has availed 2 months leave. So total 8 months we subtract. So 25 minus 8, 17 months leave available at the time of retirement for encashment. Now calculating the salary, average salary. Actually, we need the average salary, but here data is not there, only last retiring month's salary is given. So that itself is the average salary, 36,000. Now calculating exempted amount, which is list of the following 4 amounts. So Income Tax Act has given 4 amounts. In those 4 amounts, whichever is the least is exempted and the remaining is taxed. What is the first one? First one is cash equivalent to the leave period. He is having a leave period of 17 months at the time of retirement. So 17 months into 36,000 rupees. You will get 6,12,000. First amount. Second, 10 months average salary. This is given by the Income Tax Act. So 10 into 36,000, 3,16,000. Third one is actual amount received. That is given in the problem, 15 lakh. 15 lakh actual amount received. The fixed limit ceiling is given by the Income Tax Act, 3 lakh. Whichever is least among these 4 amounts is exempted. The least is 3 lakh. The exempted amount of leave encashment is 3 lakh. Now we have to find out the taxable amount. How much actual amount received? 15 lakh. And exempted amount 3 lakh. The taxable amount of leave encashment is 12 lakh rupees for non-government employee. If government employee, completely tax free, no tax at all. So this is the end of problem number 10. So totally 10 problems I've selected for retirement benefits. So if you have watched all the videos on this gratuity, commuted pension, leave encashment, definitely you can be able to attempt the problem in examination. So if you are satisfied, give a like to the video, share my channel among your friends, among your groups, so that more students can watch the video and enhance the knowledge. And subscribe my channel if you have not yet subscribed, and by the super thanks which is given below my video. Inshallah, we'll continue the next topic, that is deductions from gross income from salary, in the next video.